thing is the disclosure requirement of the assets, right? And what are the disclosure requirements? The disclosure requirement is that we need to inform in our management accounts uh, about the class of each class of the property. For each class of the property, we have to show the basis of measuring the carrying amount. Let's say that we are measuring at cost, or we are measuring at the revaluation amount, the depreciation method, what kind of depreciation method we are using. So we have to say that if we are using the straight line method or written down value method, useful life of the depreciation rates. So useful life of the asset means that we are need to give a range for by category, not or by class of the property, rather than the individual life of all the assets. So in if you see the annual reports of the companies, you'll never see a list of the fixed assets and showing the useful life of the asset, right? You will see a class of asset, let's say building. And even in buildings, you may have some buildings which are made out of wood, which are made out of concrete, which are made out of other materials, which they have different value, different life of the asset, right? They may have different assets life. uh, so instead of giving every single asset and their useful life, the usually the disclosure requirement is like buildings, 10 to 20 years of life. Um, property equipments, 5 to 10 years of life. Furniture, 3 to 5 years of life. Computers, 3 to 5 years of life. Like that, like class of its property, rather than the class of the PPE, rather than every single PPE will have a value, right? Then, apart from these three, are usually mentioned in the notes to the accounts as a policy. And then with that, there is usually a total gross carrying amount of accumulated gross carrying amount, and the accumulated depreciation is normally shown on the face of the balance sheet. So on the balance sheet, you will see only the gross amount and the accumulated amount of depreciation, total two amounts. Then there is a net book value. In the notes of two accounts, you will see the basis of measuring amount, depreciation method, useful life of the asset. If we have done any revaluation, then we will have to explain about the revaluation, the method of the revaluation, and why we did the revaluation, and what was the last revaluation date. And if there is then in the schedule of the fixed asset, where we have to match the carrying amount and the accumulated carry amount, we need to provide additional information in the notes to accounts. So that's in the notes to account, there are two sections. One is the policy, one is the details, right? So in the notes to the accounts, in policy section, we have to inform about the basis of measurement, depreciation method, useful life of the depreciation rate. And in the details method, we have to provide a reconciliation of carrying amount of the at the beginning of the year and towards the end of the year. So last balance sheet and this balance sheet, what was the difference, right? So we have to provide that, and we have to break down the reconciliation into additions, the gross value, and accumulated depreciation both separately. Because in the balance sheet we show two amounts, right? Gross carrying amount and the accumulated depreciation. So for and normally when we are showing the balance sheet, we show 2 years, right? So less last year balance sheet and this year. So we have to show a reconciliation how the balance of the last year has changed, transformed into the this year, both carrying amount and the accumulated depreciation amount. And you have to show additions, disposals, if we have acquired any new assets, if we have done any revaluation of the asset. So what if that is an increase or there is a decrease, impairment loss, reversal of the impairment loss, additional depreciation, and if there's any foreign exchange change. Usually the foreign exchange is not affecting in the subsequent does not affect the asset value unless the assets are belong like in a foreign country, right? And as a branch assets, then it will affect the foreign exchange value. And if there's any other movement in the property, plant, and equipments, so we have to explain those aspects in details, right? And if as I said, if we have done any revaluation of the property, plant, and equipments, then we also have to show different disclosure requirements where we show the effective date of revaluation, when the revaluation was done, whether the independent valuer was involved or not involved. If yes, sometimes the notes to the account require the name and the qualifications of that valuer. For each revalued class of property, we have to also tell the carrying amount that has been recognized if it was under the cost model, right? So because you have already changed, you can see from the reconciliation as well. But in the details, you have to also provide what would be the value if carrying amount if we follow the cost model, if we especially when we are revaluing for the first time, and revaluation gains including the changes in the period, if there is any and if there is any restriction to use on the distribution of the balance to shareholder. Usually the revaluation surplus is never distributed to the shareholders because that's not a real gain. That's only an imaginary gain in the balance sheet only. There's no actual cash to be distributed to the future shareholders. But sometimes the entity is holding a lot of cash, right? And they may find lesser value in particular year to distribute as a dividend. So they create the revaluation surplus deliberately to be able to distribute the dividends.